Hey guys, Dan here, and I want to look at Upstart, and I would make the suggestion to you, watch this video all the way through. Okay, so I talked about this stock yesterday in Stock Market Mentor to our premium members, noting that, let me get this out of the way here. Okay, noting that this is number one, a really super volatile stock. Here, we'll do it this way. That it was a pretty volatile stock, and so we needed to respect that. But if we got a breakout here, we could definitely see much higher prices because that's what IPO stocks do. And so this would only be for active traders. It's just not something that you want to mess around with, if you don't know what you're doing. But in the kind of market that we're having right now, this is a stock that could work, So I'd mentioned yesterday, don't just like, hey, buy the stock. But I said if the stock breaks out above yesterday's high, that's when you want to buy it, and this is why. Because with this kind of volatility, a stock that breaks out is going to get a lot of FOMO traders who want to get this stock before it goes much higher. Okay, I think that's going to happen tomorrow. Of course, I could be wrong. I'm not predicting anything, but that's what I think. If we look at the 15-minute chart, you can see the 17th, that's yesterday, had a nice smooth move higher. Today, the 18th, the high was set at the first part of the day, like before, by the end of half an hour of trading, this thing had peaked. But it didn't fall back very much. Instead, this thing formed a bit of a trading box like right around here. And then right towards the close, this started to move higher, and it had a pretty strong close relative to what's happened before. So here's my suggestion. If you're a short-term trader, you look at the daily chart. Today, the stock closed at 124.90. I would put in an entry, or a limit order to buy the stock at like 124.95 or maybe 125 if you like the even number. The reason is because if you wait for the stock to be breaking out, you lower your risk dramatically. You could say, well, if I'm buying it higher, how can I be lowering my risk dramatically? I'll tell you why. Because there's a lot more to risk management and protection than stop losses. Of course, you should use those. But you also want to be looking at what's the percentage, what's the likelihood that my trading theme or idea or what my strategy is, what are the odds of that actually working? Okay. If you're saying, I want to buy this now at 119.49 so that I can make all this money when the stock breaks out, you're kind of missing the point of trading because you don't know whether the stock is going to break out. So you actually risk losing money if the stock doesn't break out. On the other hand, if you say, well, I want to know that the stock's breaking out, because if the stock is breaking out, I can buy with more confidence, and I can also set a tighter stop because I will know when I'm wrong. If the stock breaks out and then starts pulling back to say below 119, then I have to say, all right, that's it. I'm out of here. I missed the breakout, or the breakout reversed, and so I need to get out. So the point is, you're always protecting your downside with a stop, but your stop is placed relative to where you bought the stock. Like, why did you buy the stock where you did? If you don't know why you bought the stock where you did, any stop will do. Just put it someplace. It doesn't matter. If it didn't matter to you why you bought where you bought, it shouldn't matter to you where you sold. It's a fun little game, this trading. It's gambling. So if you're doing it right, you want to wait until the stock breaks out to a new high, and that's when you want to buy it. And remember, these are volatile stocks, these IPOs, but this one now is working. And so if this does, you could see it. Certainly I could see this testing 140. After that, I don't know. I'm not going to predict that. So, all right. Here's the deal. I've never done this before, but I'm kind of seeing, I want to see how many people actually watch these videos all the way through till the end. My bet is a lot of you don't. So if you're watching this now, this is for you. I'm going to raffle off a free, an hour of free coaching just to the Chart of the Day subscribers. Members have a different deal going on. But just to, if you're looking at this thing right now and you want to possibly get an hour of free coaching, it's one-on-one, Zoom. If you live nearby, come on over. I don't care. But it's like one-on-one Zoom meeting for an hour. And this is what you need to do. You don't have to write me a long email letter. Just send me an email, and this would be at my personal email address, just Dan@stockmarketmentor.com. I know, very creative. Dan@stockmarketmentor.com. And then in the subject line, just type in COTD. That stands for Chart of the Day. Just, you don't have to do anything else. I don't need any long emails. Just send it to Dan@stockmarketmentor.com, and in the subject heading, type COTD. I'm going to collect all of these emails, and this will end. This is not an open-ended thing. This will end on Sunday, May 30th at, we'll say, midnight. And then I'll go ahead and pick one on the next day on Memorial Day, and then we'll see what happens. So this will be fun for me. Hopefully you'll get that hour. I'm sure it will be fun for you as well. So there's a first time for everything. This is my first rally. I hope it's you, baby. Thanks. I'll see you.